Madam Chair, and a big thank you to our panel today for a very interesting conversation. One of the chairwoman's ways of characterizing this hearing was who wins and who loses. And I've spent a bunch of time in the last couple of days looking at the various players here. I'm pretty convinced that the wholesalers, Citadel is one of the winners. They make a lot of money. They're the casino in this story, and the casino tends to win over time. Robinhood has a valuation of $5.6 billion and makes a lot of money from the casino. So who loses? And I want to spend some time talking about the person who usually loses, and that's the retail investor. And while I have supported for many years the democratization of finance, as we say, it's not just in Washington, D.C., but on Wall Street. The retail investor is known as dumb money. And there are any number of structures that are set up to take advantage of the retail investor. And I think it's worth looking at that because as much as we're celebrating Mr. Gill here, we're not talking very much about Mr. Salvador Vergara, who was featured in a Wall Street Journal story, who took out a $20,000 personal loan through Robinhood, invested it in GameStop, only to see the value of his position go down 80%. So Mr. Vergara is out $16,000 he doesn't have, that he owes to somebody else. And as much as I support the democratization of finance, we need to be thoughtful about this. So, Mr. Tenev, my question is for you. You quoted a $35 billion number as what I interpreted to be profits in excess of deposited funds and securities. If you just look at your customers who traded in GameStop over the period of its increase and subsequent decrease, Mr. Tenev, how did your customers in the aggregate do? Did they win or did they lose?
Thank you, Congressman, for that question. I don't have that particular cut of the data top of mind, so maybe we can get back to you on that one.
All right, you don't have that. So you do have a $35 billion figure. The figure doesn't mean a lot to me because it's just a dollar number. Help me convert that to a rate of return. First of all, is that $35 billion, is that gross or net? In other words, is that actual profit or does it include margin shares, other forms of leverage that may actually not belong to the account holder?
It does include, Congressman, unrealized gains. So it's the value of assets, both including positions in securities and cryptocurrencies.
Okay, I get that. I get that. But again, $35 billion doesn't mean anything to me unless you can convert that into a rate of return. So do that for me. What is that on what asset under management number is that $35 billion unrealized against?
The asset under management number is not one that Robinhood has publicly shared.
Okay, but you can't share $35 billion. Sorry, Mr. Tenev, I just don't have a lot of time. $35 billion is a meaningless number. I need to know what that is in terms of return. So convert that for me into rate of return. So I can compare it to Treasury, so I can compare it to the S&P 500.
Congressman, with respect, I think the proper comparison is to customers not investing at all. Much of our customers are investing for the first time and are taking money that they otherwise would have spent or consumed and putting it in.
Mr. Tenev, again, I don't want to be rude, but it's my time. Again, you offered up the $35 billion number, which, as you and anybody else schooled in finance knows, is meaningless unless you convert it into a rate of return. So just please convert that $35 billion number, which to the folks watching at home sounds like a lot of money. But what does that actually convert to in terms of rate of return, which is what matters?
Congressman, $35 billion is indeed a large amount of money, especially for our customers who are mostly small investors. It's more than most corporations, nearly all corporations have paid.
Mr. Tenev, again, don't make me be rude here. You and I both know that $35 billion of unrealized gains, if that's on a base of $100 billion, that's a 35% of return. If that's under $1 trillion, it's a radically different rate of return. So what I'm trying to get at, Mr. Tenev, here is you threw out the number of $35 billion. I actually think the right comparison is what if your clients had simply invested in the long run in an S&P index fund? Would that number be more than $35 billion or less?
Congressman, with respect, I don't believe the right comparison is investing in an S&P index fund. I think the right comparison is not having invested at all and having instead spent that money and consumed it.
No, it's most certainly not. It's most certainly not, Mr. Tenet. And so I'm going to ask you, I'm out of time, but again, you put out the $35 billion number. So I think it's only decent, because you and I both know that a hard dollar number is meaningless unless you can convert it to return. So I'm going to ask you to convert that. Obviously, I'm out of time, into a rate of return for us.
You're out of time.
Shepard Smith here. Thanks for watching CNBC on YouTube.